What we have been seeing since 2008 is severe deflation, and it is a warning to get your act together. You don't have a whole lot of time. You need to prepare for what's coming.
Hey friends, thanks so much for tuning in. I'm very happy to have on the line Mike Maloney. He's been kind enough to join us again. He's the founder of goldsilver.com. Of course, he's written important books like Guide to Investing in Gold and Silver, Protect Your Financial Future. His new episode of his Hidden Secrets of Money out. It's called Rollercoaster Crash, Top 4 Reasons for Deflation. And I'm just thrilled to have Mike back. Mike, thanks for joining us.
Thank you. It's always a pleasure.
Well, it's always a pleasure to have you. You've been a very busy man, and you're such a good guy, Mike. You care so much about education, which is why you guys are making this epic series, Hidden Secrets of Money. Mike, let me just ask you this. One of the topics that I find really the most intimidating is the topic of deflation, right? I understand how everything else works, and so do most of our listeners. But the topic of deflation is very mysterious to me because deflation means cheaper prices. That should be good for the consumer, but I think deflation is one of those things that scares the heck out of the bankers. Do I have that right? Why should we be afraid of deflation?
You do have that right. Deflation scares most people because anybody that is leveraged out gets punished for taking on too much leverage, and they end up losing everything. That's what happened during the Great Depression, is the people that had any large portion of debt where they were just able to service their debt before the deflation could not service it during the deflation and lost those things like the family farm, the house, the car, and so on, their businesses. But it's a good thing in that it clears out excesses and allows it's a reset. It allows a fresh start in the economy, building from a solid foundation instead of a foundation that's made up of a lot of hocus pocus voodoo, which is what we have right now. We've got a whole lot of false debt in the system, misallocations of capital. If you look at the last, since the year 2000, the markets have been trying to deflate. The free market, the commodity prices went up for a while during the real estate boom. But what was the real estate boom driven by? It was driven by interest rates being too low. And ever since the real estate boom popped, we've had the markets, this natural deflation trying to happen. And there's countries with negative interest rates, and we're at zero interest rates in the United States. Now, to put that in perspective, it has never happened. In all of human history, this has never happened before. And it's an artificial thing where there's people who think they know more than the free market, who have the arrogance to think that they can actually control something that has all the information of every transaction in the society. That's the free market, setting supply and demand in equilibrium using what's called the price discovery mechanism. So prices rising and falling because of a whole bunch of people bidding on things. It's bids and asks on everything in society, and that's what sort of determines pricing. If you raise your price too high, you go out of business. Because you lose demand. If you price your goods too low, you go out of business because you don't have profits. So every business has to seek this equilibrium constantly, except when it comes to an entity like the Federal Reserve, where they're given ultimate power, and they get to just have a committee meeting and decide on the price of the most important commodity that there is, money. Actually, it's currency. We don't use money in the United States or anywhere else in the world. Currency has to be a unit of account, a medium of exchange. It's got to be portable, durable, divisible. Something called fungible. If I loan you a $20 bill, I don't care if you pay me back with 5 ones, a 5 and a 10. It doesn't matter. The units are interchangeable. That's fungibility. Money has to be all of those things plus a store of value. When the Federal Reserve dictates the price of money, it disturbs, the price of currency is supposed to be determined by the free market, and that will set supply demand in equilibrium. Mm-hmm. And they interrupt that equilibrium by artificially setting the rates low or too high, and so they create bubbles and then they pop bubbles. It means that ever since the Federal Reserve was born, and the Federal Reserve Act was passed in 1913, but they didn't go into business actually until November of 1914 was when they opened their doors. And since then, we have not lived in a free market society because the currency is 50% of every transaction. It's the thing you're buying with the currency you're buying it with. And if one half of every transaction is mispriced because somebody is deciding on the value and the cost of that currency, instead of allowing all the bids and asks in society decided for us, then we do not live in a free market. We live in a top-down command economy that's that's manipulated, and all manipulations come to an end someday. This is a 100-year-old manipulation.
Right. And, in Hidden Secrets of Money 6, you note, well, and you've been actually saying for a very long time, and you predicted it in your book, that what we would see would be deflation, then a helicopter drop, really essentially an overreaction by the Federal Reserve and central bankers, followed by big inflation and ultimately hyperinflation. When you talk about the helicopter drop, I think you're actually talking about money that's still going to be coming in the future, printing that's going to happen. Not QE1, not QE2. We're going to see this overreaction coming, post haste. We're going to see this overreaction coming in the future, aren't we?
Yes, that'll be phase two of the overreaction. I said that there would be the threat of deflation. That was and there was actual deflation, not just the threat of deflation. If you excess reserves is cash that the Federal Reserve creates and shoves on banks' balance sheets that is in excess of what they are required to have or maintain, backing all of the fractional reserve lending that they do when the banks create currency. They have to have a very, very small percentage of base currency, it's called, which is equivalent to paper dollars. It's either paper dollars or deposits at the Federal Reserve, redeemable in paper dollars.
Mm-hmm.
It includes those deposits plus bulk cash. And it used to be a very, very small portion of the currency supply. But if you deduct that from uh, M3 or M2, if you deduct excess reserves, you will see that there was a deflation of M3 of greater than $1 trillion during the 2008, just after the 2008 crisis, from the currency that is created by loans that businesses and people take out, whether it's signing a credit card or whether it's borrowing for your house or a car or whether it's a business borrowing. That currency gets created by the banks. It didn't exist until your signature hit the paper. And that currency vanishes as old loans don't get rolled over and new loans don't get made as you make the payments for the principal plus the interest. Now, the interest was never borrowed into existence. Paying the interest causes the currency supply to contract. So we have to go deeper in debt every year just to stay even because there's interest due on every dollar that's borrowed into existence.
Right.
So the whole thing is a Ponzi scheme that will fall apart. But what you've been seeing, though, since 2008 is the market desperately trying to deflate, to create deflation. That's the reason interest rates are down at zero, and they haven't been able to really pump the main economy. What they've pumped are asset prices again. They've created another bubble in real estate and another bubble in stocks.
Yeah, that's right. And so we have seen actually a lot of inflation in the stock market, in the video, collectible cars, fine art. We've got a housing bubble in San Francisco and New York and other places in the nation. We're in a credit bubble, a bond bubble. Once these bubbles burst, it's going to be game over, especially since that's where all the fiat is hiding right now. We don't see hyperinflation necessarily in food staples and gasoline. We see deflation in gasoline. But, eventually when those markets pop, that's going to be a lot of fiat running around, isn't it?
Right. Right now, we are in what I call the Bernanke bubble, and it's going to lead to the Bernanke bust, just like Alan Greenspan was responsible for the bubble during the NASDAQ, and then the subsequent bust when it crashed. And he took interest rates down too low to try and reflate the markets, and he accidentally created a real estate bubble. So that was also one of Greenspan's bubbles. And the subsequent crash was then his fault, even though it was Ben Bernanke that was dealing with it. But Ben Bernanke's overreaction to that has created this bubble. And so the Bernanke bubble is going to lead to the Bernanke bust. Now, in my book, I said that there would be big inflation, and that was the going into the housing bubble. That came true. And then there would be the threat of deflation, which was the crisis of 2008. There was actually some real deflation that happened, contraction of the currency supply, to which Ben Bernanke, and when I wrote this, Ben Bernanke was not yet Fed chairman, to which Ben Bernanke would overreact into a helicopter drop. Followed by, actually, I didn't mention Ben Bernanke in that paragraph in the book, but I did say he would be our next Fed head, which would cause a big inflation, and that is what happened in asset prices. It didn't actually, because it's just excess reserves on the bank's balance sheets, and they didn't create a whole bunch of loans against it. It didn't flow out to Main Street. Mm-hmm. It stayed at Wall Street, and but then. Basically it's the free market. Whenever they do some manipulation in one direction, the free market eventually overwhelms it, and a whole bunch of energy, the same amount of energy that went into the manipulation, is released in the opposite direction. Mm-hmm. And that's what's going to be happening shortly here. I think 2016 or 2017 is going to be a devastating year, leading to the Bernanke bust. And I said that would then be followed by hyperinflation. And that's simply because the world's central bankers are all Keynesians, and they will not tolerate deflation. It scares the hell out of them. Our current debt-based monetary system cannot function under deflation. The last deflation that we had, 40% of our currency supply was gold. It couldn't evaporate. It wasn't borrowed into existence. Today, there's nothing that backs the currency supply. So the first bubble that popped, the first of Alan Greenspan's bubble, was a stock market bubble. So it was a stock market crash. The second bubble was real estate and stocks. So it was real estate and stocks that crashed. This one is going to be stocks, real estate, and bonds. So pretty much all of the assets. And when you take, if you've got a nation of investors, and they've been punished twice already in the last 15 years by stocks crashing, and then they get punished a third time by stocks crashing. And a lot of them also went into real estate in 2004, 5, 6, and 7, and then they got punished on real estate, and they're about to get punished again. I mean, they're going to get hurt. And then we have a bond crisis on top of it. Where is there left to run in society? What other asset class is there? There is only the precious metals. In deflation, the rest of the commodities will not do that well. They've been falling now since the crisis of 08. Many of them, the CRB index, which is a basket of commodities, is back to 1999 levels. Mm-hmm. So what we have been seeing since 2008 is severe deflation, and it is a warning to get your act together. You don't have a whole lot of time. You need to prepare for what's coming.
Yeah, I couldn't agree more. And we have 9 minutes left with you. So I'm going to ask if you would mind if I played a 45-second clip from Paul Craig Roberts. I interviewed him the other day, and I asked him about the state of the economy. And he said something about how the Fed and the central bankers are stitching this thing together with their manipulation. I'd like to play that clip for you, if you don't mind, before we talk about the price of silver. Okay.
Okay, go ahead.
All right, holler if you can't hear this, but here it comes.
Washington has also got the European Central Bank creating 60 billion euros every month. And they've got the Japanese Central Bank doing quantitative easing, even in excess of what the Federal Reserve did. So as the currencies everywhere are printed or created, it keeps the dollar exchange rate stable. The only place they're in real danger is from gold and silver, but they now have stopped the rise of gold and silver because the price of gold and silver is established in the futures market, and they can print up all kinds of paper gold contracts.
Okay, now I'm going to turn it back to you, but my question is how does the manipulation ever end when central banks across the planet are involved in it and they are manipulating silver and gold mercilessly?
Okay, yes, absolutely they are, especially if you take a look at a 1 month chart of gold or silver, especially silver. It fell for 15 days straight. And it's not large steps like most of the pullbacks in silver are. Usually you see these big bars on a chart, big red bars going down. And were little tiny consistent steps over a 15-day period. And to let you know how rare an event like a decline 15 days in a row is, there were 3 other times in history that it declined 9 days in a row. There was one time in April of 1980 where it declined 23 days in a row. There's only one time in history that exceeded. There's 2 times that exceeded 9, and this is one of them, 15 days, and one time, and that was right after the bubble popped in silver and the Hunt brothers fiasco and all of that happened. That was the 23-day in a row. So this is an extremely rare event. It looks manipulated. The only other place to run from all of the currency manipulations that are going around the planet is gold and silver. And what happens is the free market will overwhelm any manipulation, and the more it gets manipulated, the greater the energy is stored to be released in the opposite direction. So the more that they manipulate it down, the higher that it's going to go eventually, and this is the gift from God. Right now, you get to buy gold and silver artificially cheap. It is artificially suppressed, and the proof of the pudding here is like I don't know what's going on the futures exchange this week, but last week the commodities exchange, there were for every ounce of gold that was in the registered category deliverable, there were I believe 293, almost 300 ounces of paper gold that had been sold into the market, and that suppresses the price. But when the price is too low, there are big buyers out there. If you look at China, Russia, Turkey, and India, those 4 countries combined since 2013 have been purchasing more than all of the global production of gold during that period of time. And whatever is above global production has to come from somewhere, and it's coming from the West. So this suppression that they're doing is causing gold to flow out of GLD and off of the commodities exchange and from the West to the East, where China and Russia and India are all just gobbling this stuff up because the price is too low.
Yeah.
So what'll happen is you may see the price go a lot lower. You might see gold below 1,000. It's possible we could see silver in single digits, but you won't be able to buy physical. What happens is the spread just goes huge when the price is manipulated too low. And eventually, the low price causes shortages because it isn't as profitable to mine. So you don't have as much coming to market during the low price periods. So inventories fall. You have silver flowing out of the commodities exchange, for instance, like it has been lately, and that means that eventually there's not enough to deliver into, and there's the potential of a default, and that would cause the price to explode. The price will go a lot higher because of this manipulation, and the manipulation creates an opportunity, which I've been calling the greatest opportunity in the history of mankind.
Yes, sir. And you just called it a gift from God. And I just want to say one thing about India. You know, our friend Steve St. Angelo over at SRS Rocco has done some research this year indicating that India is on track this year to take down between 33 and 40% of the global supply of physical silver. So people want the real stuff. They don't want the funny money, the paper silver from the comics. So my last question for you before we lose you is in regards to John Williams' 1980 inflation-adjusted all-time high for silver, right? The all-time high in silver was 50 under the Hunt brothers. People might say, oh, well, that's a ridiculous ridiculous price. That was manipulation. It should have never got to
Yeah.
50. Fine. Say it's 25, because according to John Williams, the inflation-adjusted 1980 high for silver now in today's dollars is 601. So if you think
Yeah.
50 was too high in 1980, say it was 25, well, that's 300 today. How about 1250 in 1980? That it should be 150 then today. 625 in 1980, that equates to $75 today. You're calling it a gift from God, and I agree with you. And it's clear that the banksters want to demonetize silver and scare the world away from silver, but
Yeah.
it's not going to work, is it?
No, I absolutely believe that you're going to see triple-digit silver sometime in the future, probably before the end of this century. So that's only 4 years away at this point.
Or the end of this
So,
decade, you mean?
huh?
The end of this decade.
End of this decade. I'm sorry. Yeah, not century. The end of this decade. I believe that we're going into this bust, and it'll be followed by a currency crisis. Now, at first, people have been trained to go toward U.S. treasuries in a crisis as a safe haven. And they probably will, but it'll be short term. So the dollar will rise, and that's part of deflation, is currencies having greater purchasing power, but there's less units of currency out there because the currency supply is evaporating. So the dollar will be the short-term beneficiary, most likely, of a global currency crisis. But eventually, just like Jim Rickards believes, I think they're all going to fall like dominoes. There's going to be just general chaos. When I was writing my book, one of the things that I stumbled across accidentally is that every 30 to 40 years, the world had had a brand new, entirely different monetary system. Back then, people have written about it since, but back then, nobody had written about all of the different monetary systems and the transitions. I was just putting a whole bunch of crises in a spreadsheet, looking for cycles. I was looking for regularity of something, and the thing that leapt out at me was that we had the classical gold standard before World War I, the gold exchange standard between the wars, the Bretton Woods system from 1944 to 71, and then the U.S. dollar standard as a global monetary system from 71 until today.
Mm-hmm.
And each one of these man-made systems develops stress cracks and starts to implode because it can't account for all the forces in the free market. It's a man-made system. The poorest design one is the global dollar standard, and it didn't have any cracks until Saddam Hussein started selling oil for euros. That was the first nail in the coffin of the global dollar standard. But now the cracks are coming almost every single week. There is another nail in the coffin. And so I think you're going to see the global monetary system, history will repeat. It'll start to implode. There will be an emergency meeting of a bunch of finance ministers and central bankers and economists trying to hash out a new monetary system. But it's going to be chaos, and I don't think that people are going to trust other fiat currencies like SDRs and things like that. And at that point, what will happen? They'll look around and they'll say, what worked before? Well, that's gold, and if gold and silver. And if that happens, there's the prices of gold and silver measured in those fiat currencies would have to go astronomical. Because it's going to be the first transition that everybody is going to feel. The last transitions were all baby steps off of full gold backing, 40% gold backing, and unspecified gold backing under the Bretton Woods system, but still gold backed, but through the US dollar. And then no backing whatsoever, except a promise to tax us in the future. All currencies are a promise to tax you in the future because they're debt backed. We have to repay the currency supply plus interest, and that comes out of taxes, or it comes out of taxes for base money. But this time we have to go from nothing back to something. It's not a baby step. This is going to be something that every single person on the planet feels, and it's a global event. It's going to be the greatest wealth transfer in history, therefore it's the greatest opportunity in history.
Yeah, and many, many people are going to be very, very, very hurt because they don't see what's coming. But if
Exactly.
but if they watch Hidden Secrets of Money, they will. They'll know what's happening, and they ought to. So I
Yeah,
can't
thanks.
recommend it more. It's Mike Maloney is the YouTube channel. I believe there might be a goldsilver.com YouTube channel as well, but certainly you can go to goldsilver.com.
Or you can go to hiddensecretsofmoney.com and view it there, and there's a whole bunch of bonus features connected with it that you can't view on YouTube. They're only on hiddensecretsofmoney.com, and it's all free.
Well, it's very generous, and you are a stand-up guy. And my last question for you, sir, is how do people work with you guys if they want to get some protection?
Oh, okay. Well, that wasn't the point of this interview, but
I know, but you're too
I do
kind. I
have a
have to give you
company
the
called
opportunity when you're so kind.
I've got a company called goldsilver.com, and instead of doing advertising and stuff like all of our competitors, we're basically the same price as all of our major competitors, but we take our profits and plow them into education because that is our passion. We're trying to, the mission of Hidden Secrets of Money is to enlighten the world that maximum prosperity can only be achieved through individual freedom, free markets, and sound money. And when you measure societies around the planet throughout the decades, this is an absolute fact. This is the only way that you can achieve maximum prosperity.
All right, guys. Well, again, you barely said it. You're so modest. Visit Mike at goldsilver.com, and there'll be a way for you guys to buy precious metals through goldsilver.com. Our guest has been the one and only Mike Maloney. Mike, thank you so very much for your time.
Thank you. It was a pleasure.
All right, God bless. And guys, thank you for tuning in. We appreciate your support at SGTreport.com. Have a terrific week ahead. Thank you, sir. Bye.
Bye.